Hello, hello. Wow. I don't understand this like at all. Okay. Okay, hello? Yes. I believe you can hear me now. Fantastic. Very exciting. Very exciting. Let's make sure. Gotta love it. Are you guys enjoying the storm? If you're here in Arizona, we're actually getting some rain. Getting some rain this week is pretty exciting for us. I know the rest of you around the country, you're like, yeah, rain, big deal. But here in Arizona, it is an event. Okay. Let's say that much. Share my screen. Nope. Nobody wants that. Much better. Now, if I could just. Yes. All right. Well, without further ado, let's get the party started, shall we? Great. Technical difficulties. This is a live event. Just want to let you guys know. All right. I am flying solo. So thank you very much for being here. Good evening, everyone. Good evening, Arizona, and welcome to tonight's webinar. And tonight's webinar is appreciation, affordability, and the 50-year mortgage that many of you have heard so much about. So should we celebrate it or run for the hills? Well, I'm Natasha Tomlinson, your Arizona realtor and homeowner advocate, serving the entire greater Phoenix metro area. And tonight is going to be a good one. All right. Not just because it's Thanksgiving week, not just because mortgage rates appear to be stabilizing, but because you are about to walk into holiday conversations with more economic talking points than your conspiracy theory cousin who read one article on Reddit and is now the mortgage specialist. Tonight, we're covering the state of appreciation and affordability, the new 50-year mortgage versus the 30-year mortgage. We're covering ARMs, FHA, and VA loan assumptions, what the 3% CPI means for your home value, the end of quantitative easing, HELOCs, and debt risk, and why buyers and sellers have opportunities right now, today, and a full, deep Arizona market update. At the end, we'll certainly have an offer for you, so it is worth sticking around. Without further ado, let's begin. Let's start talking about affordability because, ultimately, that's the word of 2025. People ask me all the time, Natasha, is Arizona still affordable? Well, here's the truth. It is not 2000. It is not 2008. Lending standards are stronger today than they have been in decades. Buyers need more than to fog a mirror in order to qualify for a loan. And homes still appreciate in Arizona long-term because of population, because of jobs, because of climate, and overall because of our demand. But we also cannot ignore affordability pressures. In this time, we've seen rates hovering around 6.38%. We've seen price stabilization. And in the last 6 months, we've seen a decline in the median price of all homes across the valley at a decline in 2.6% over the last 6 months. We've seen inflation climb a bit based on the CPI from September of 2025. We now sit at 3% nationally. Arizona's inflation, however, is lower than the national average at 1.7%. So the pressure, it's out there. The pressure is real. But remember, so are the opportunities. So let's break this down AZ style. Simple, honest, and with a few receipts. Let's go over the good. The good is the 50-year mortgage, okay? It provides you with lower monthly payments. It helps with short-term affordability. And investors may use it to boost cash flow. And it can soften payment shock in high rate environments. But with good, there's always a bit of bad. So let's disclose that as well here for you. The downside with the 50-year mortgage is you pay far more interest with this option than the traditional 30-year mortgage. You build equity at a much slower rate. It is dependent heavily on having home appreciation. It creates long-term consumer debt, and it could distort affordability cycles. It could reduce access to your home equity line of credit. Access to your HELOC could be reduced, and it could reduce mobility. People get that locked-in effect where they purchase the home thinking this is their starter home and they'd move up, but they find that they are unable to do so because the market appreciation isn't there, and because they have more interest and not enough equity to move on with the next stage of their home buying journey. So here's the big question. What happens to the market if a 50-year mortgage becomes normal? Well, here's what we know. We know that Arizona is highly sensitive to population growth. Arizona is highly sensitive to jobs. We are sensitive to inflation, sensitive to investor activity. So a 50-year mortgage doesn't really fix affordability. It stretches it, like putting Thanksgiving leftovers into a small Tupperware container, right? It kind of fits, but it spills all over the place and causes more of a mess. So we also have the HELOC impact. That home equity line of credit depends on there being equity. It doesn't depend on time, and the two do not always go hand in hand. If people build equity more slowly, HELOCs become smaller and they become riskier as well. They become less available. Banks won't lend out 80% of equity that doesn't exist. So here are your official impress the table talking points, okay? Arizona inflation is lower than the national average, which sits at 1.7%, and the national average currently sits at 3%. A 50-year mortgage lowers your payment, but increases your total interest. And assumable FHA and VA loans are a major opportunity right now. Rates are sitting around 6.38% and stabilizing. We're very happy about that. And we're seeing the best fourth quarter that we've seen in recent years. Really, since 2022, this is the best fourth quarter that we've seen. Homes for sale under 300,000 is rising fast. We are seeing a buyer's market overall. and definitely in that price point, particularly with condos. The Fed is ending quantitative tightening as of December 1st, and that is a huge deal. Rents are falling because vacancies are rising. So your cousin, the conspiracy theorist, or maybe it's your uncle or whoever it is, right, won't know what hit them when you strike them with all this information. Let's talk a bit about assumptions, particularly for FHA and VA loans. This, again, is a big opportunity. So you have the opportunity to take over someone's mortgage. There is a qualification process there, but you could possibly get a rate in the 2s, 3s, 4s, and 5s, lower than today's market rate. VA buyers can also use their entitlement more than once, and FHA assumptions often need less cash in order to acquire those mortgages. Another option available today are ARMs. Yes, I know many people kind of cringe when we hear that, but they are an option for the educated buyer. The adjustable rate mortgage, they are making a comeback. And like I said, they are not the villain for the educated buyer. They are great for short-term plans. They are great for buyers who are planning to move or refinance within the next 5 to 7 years and pretty sure of their plan. In my opinion, Arizona, I really don't think any of us need a 50-year mortgage. The 40-year mortgage is available out there. Hardly anyone takes advantage of that because it's a fairly expensive loan product. So we certainly don't need a 50-year mortgage, in my humble opinion. What we need are more starter homes. What we need is better down payment assistance, possibly stronger builder pipelines, smarter local zoning, maybe a reduction in PMI if the federal government wants to be involved. We need faster permitting. We need to let the market breathe and do what it does without stretching loans into the next century. Now, before we wrap up tonight, I want to give you, the homeowner, 5 of the best home improvements under $2,500 that can really make a big impact when it's time to sell. And listen, if you need a way to work off that turkey, the stuffing, the 5 slices of pie, this might be your moment. Because yes, 'tis the season for honey-do lists. And if you don't have one yet, don't worry. I'm about to give you one. Consider it my early holiday gift. So here we go. 1 would be the interior paint refresh, around $1,200, $2,000. A fresh coat of paint is like hitting the reset button on your home. It covers the scuffs, maybe some odors, brightens rooms, and instantly makes everything feel newer to potential buyers. And if you paint it yourself, congratulations, that counts as both cardio and stress relief. Another option is landscaping and overall cleanup. Estimated cost $300 to $800. Trim those bushes, mow the lawn, yank the weeds, refresh the gravel, clean up the yard. It's amazing how much curb appeal goes up with just a few hours of outdoor work. So rake those leaves is basically nature's treadmill. How about some new light fixtures? $200 to $500. Swapping old lights for modern ones is one of the fastest ways to update your property. It's also the quickest way to discover whether your ladder is tall enough or whether you really meant to buy a new ladder for that honeydew list. A fourth option is, again, a deep cleaning. Clean that grout, all right? Clean the appliances. $150 to say $500. Clean homes sell faster. People want to picture themselves there, not you and whatever comes with you. Okay, it's that simple. Fresh grout makes kitchens and bathrooms look almost new. And if you scrub it yourself, congratulations again. You just burned off those mashed potatoes. And number 5, new door hardware, new knobs, and maybe even some new faucets. Estimated at $250 to $600. Small details make a big difference. Modern hardware instantly improves the look and feel of your home without blowing your budget. Plus, unscrewing 37 old doorknobs, that's a full body workout right there. CrossFit has nothing on you. These upgrades bring returns far above their costs, and most can be knocked out in a weekend or politely handed to someone on your honeydew list with a love letter of with a little bit of a love letter and a bit of gratitude. And if DIY just isn't your thing, it's not your love language, that's fine. I have great vendors I trust who can take care of everything for you. So tonight, we covered affordability, appreciation, 50-year mortgages, adjustable rate mortgages, loan assumptions, the Fed, market data, and what all of this means to you as the homeowner. And here's the bottom line. Real estate is hyper local. Your neighborhood is its own economy. Your home deserves a personalized strategy. So what we're offering here today is we're offering either a same-day cash offer for your property or a free customized market report. Do one, do both. Why not? I'll be sure to put the link in the bio for you to schedule that. Remember this quote from Henry David Thoreau, right? Go confidently in the direction of your dreams. Live the life you've imagined. One of my favorites, right? So again, I'm Natasha Tomlinson, your Arizona realtor and homeowner advocate. I wish you all a happy Thanksgiving week. Enjoy your pies, your presents, or upcoming Thanksgiving week. Enjoy your pies, your presents, and your parties. And I'll see you next Wednesday. Ta-ta for now.